Relative strength, we did cover in some of the previous sessions, right? We did cover how do we find outperforming stocks, right? So go here, or let me go to custom screener, right? Since we have gone into custom screener so many times, I feel that you guys are a little more comfortable with it now. Go to strength, go to relative strength, find all the stocks which are giving better returns than Nifty in last 1 year and returns better than 20%, right? So remember, guys, few minutes back I mentioned, right? It's like you should never look in isolation of any returns. You should look in perspective, and one of the best benchmark is an index. If it is a large cap, Nifty 50 is a good index. If it is a mid cap, look for a mid cap index. If it is a small cap, look at small cap index. If it is a banking stock, look at Bank Nifty. If it is an auto stock, look at Nifty Auto. Right. So what we are looking is basically all the blue chip stocks which are performing better than Nifty by at least 20%. So this is where you'll find all the stocks which are doing much better than Nifty, right? So the best example here is Adani Transmission. Look at Adani Transmission. You'll see an excellent this thing. We go back to 1 year. So this is where you'll see the returns. The returns is excellent. So this thing, Nifty is almost flat. Nifty is almost flat. Whereas what Adani Transmission is giving you a stellar return of about 3 times, right? About 260 to 280% is what it is giving you returns. The next one is Adani Greens. Adani Greens is also giving very good returns when it comes to Nifty. Nifty being flat, Adani's this thing green is also giving very good returns. So this is how you'll see that which stock is doing good, right? Now this is where a big divergence is, right? If you see Adani Greens, it seems to be exhausting. The trend seems to be exhausting, right? A possibility of head and shoulder is also here, right? And so left shoulder, top, right shoulder, right? So it looks like sort of exhaustion. And that's where your other interest on the chart will be better, right? Look at this one. The momentum is really started from here. So this is in much better momentum compared to the previous one which we saw, right? So start looking from one factor and then do more complete complete analysis before you go and buy shares, right? This is even looking better, right? This is Mahindra and Mahindra, right? Tata Motors, I mean, yeah, so it has performed well. It has given all the moment maybe about 8-9 months back around October time frame. I think that's where they declared this thing, right? EV venture, a big investment on EV, right? So stock jumped by almost like I don't know what percentage, very good percentage. Right? Now that particular euphoria, right, is over. If you see, the euphoria is over and it is coming back to its normal league, right? So all the movement of the investment which could have taken it to a higher level, it has already reached there, and then it's stabilizing. It's in a very roughly standard zone, right, or a narrow zone out here. Right? So this is how you'll compare a lot of things, right? So this will help you to find where the momentum is. Momentum is much higher on ITC compared to Tata Motors, which we just saw a while back, right? So it will help you to find that information. Compare stock to Nifty, compare with Bank Nifty. So let's look at stocks which are financial stocks with Bank Nifty. Nifty Bank, right? Then we change this to banking stocks. Right? So these are all stocks vis-a-vis Bank Nifty, right? Who is performing best? Jindal Poly Investment Finance, right, is performing very well, right? Then there are the other things. So we don't see too many banks out here, but if you just bank, you'll see Bank of Baroda performing better, Canara Bank, Yes Bank, Karur Vyasa. Yes, a lot of people will feel yes, bank is doing good after a long time, right? But it's performing better than Nifty. If you just look at the chart here, take it to a year. Oops, sorry, I messed up. You look at 1 year chart, then if you see the movement of Yes Bank is much better than Nifty. So maybe certain change in the trend or something, which you can do your analysis later. So the idea is just to tell you that how do you find relative strength? Right? Relative strength is very important. Same thing is underperforming. You can look at the stocks which is returns below 20%. So some of the stocks are not performing as good, right? Dhani Service, right? A financial company. Dhani is, I think, India Bulls, if I'm not wrong. It used to be India Bulls. Now it's Dhani, right? One of the stockbrokers, right? So similarly, Muthoot Finance is doing bad. There are a lot of other organizations that are not doing as good as Bank Nifty. Multiple time frame you can look for. You can look from 1 week period all the way to 10-year period. For example, let's look at 10-year period. Not sure how many companies are there. Then the performance. Maybe we change it to Nifty. Right? That's a better one. Above 20 is a bad number. Let's put 200%. Right? So there are a lot of companies which are giving excellent returns, right? Bajaj Finance being one of them. Right? On 10-year period, if you see Nifty, 10 years generally goes more like this exercise. Oh, sorry, I missed up again. Bajaj Finance or Finserv? What was it? Finance. Okay. Right. Look at this. Right. There's no comparison at all. If you look at 10-year period, there's no comparison at all. This Nifty is hardly given. I mean, it has also given a stellar return, which is 248%. It's considered pretty good, on a 10-year. But where a Bajaj Finance goes is like pretty much limitless, and it's consistently growing, bearing some. This may be a Corona time. Yeah, this may be Corona time. Otherwise, it's giving stellar returns. This may be Ukraine time, right? Other than these two major hurdles, global hurdles, right? It's doing excellent. Right? So this is where you can find long-term things, right? Which is trending up very, very nicely, right? So this index can help you over there. Right? Relative strength, is it Top Stock Research specific? No, it is a general concept, but since it is strength, we have included along with the other strengths, right? So you'll find relative strength in other places as well, other tools. Use of relative strength, analyst looking for returns greater than Nifty, greater than other index, or even if you are looking for something, right, which let's do a slightly different thing, which indexes are giving better returns than Nifty, right? So what you do is you just keep it 1 year, right, and let's keep it 20%. Instead of basically stocks, right, what you can look at is basically, right, which indexes are giving better returns than Nifty, right? So basically energy and VIX are giving better return than Nifty by at least 20%, right? So that's how you can compare index versus another index, right? Feel free to change index to another index. You can compare with small cap, large cap, FMCG, and so on and so forth, sectorial as well as broad-based index. Aggressive analyst use relative strength and stable and technical, right? So relative strength is good, but technical is also good. Growth is good. Yeah, ride the wave. Like what lot of you may have used Bajaj Finance as one of the wave, right? Just ride that wave. Titan used to be very good. I don't know where Titan is today. I haven't tracked it for a while. Yeah, Titan, another wave. You see only 2 dips in last so many years, right? And it's not that I'm recommending any of these stocks, right? It's all historical thing which I'm observing right in front of you. So bearing these 2 major blips, right? Corona and the pandemic and the war fear, right? This stock is doing good for a very, very long time, right? So ride the wave if its growth is good, right? Look at technical strength. Titan has come in. Okay. Right? Defensive stocks, strength, stability. Right? Stability is always important so that your money doesn't become zero on one fine day. A lot of us have lost money on Satyam. Right? Suddenly the money got wiped out. Anybody who's used to trade at that point of time, they would know. It was not like a slow death, it was like a sudden one, right? Reliance Power was relatively slower, right? So you had some opportunity to exit. Satyam didn't give that opportunity to a lot of us. Okay, so basically, fundamental strength, startup business, so it's relative strength, right? Uh, you have to look at all these aspects, right? The startup business or a lot of. Okay, so these are cautions basically, right? You need to look at macroeconomic things. Startup works in a very different way, right? Because there can be sudden growth. It has to be growth because you start from zero, right? If the revenue is 1 rupee today and revenue goes to 100, it's bad as an absolute thing. But from growth perspective, it has gone up by 100 times, right? So you have to look at that. Same goes with the price. Cautions. Guys, all these things, right, are based on automated tools, right? Automated tools can give you a very good level of prediction up to a certain level only, right? Only up to a certain level. At the end of the day, a human eye is required to validate it. If you can do it, well and good. Otherwise, seek help from one of the experts. Also, all these things, right, whether it is intrinsic value or a technical strength index, it's based on the historical value, right? We try to do some sort of projection, but the projection is only when the situation is same, right? Situation can change. We have seen Vedanta falling badly, right, from that period, right? So, and some of the examples that we have seen, AT&T was I'll give you an example, right? There was a company called AOL, America Online. Some of you may have heard about it, right? So it was like a paper tiger. It became so popular, it became so household name in America in around 2000 time frame that it was able to buy, just from the share value, it was able to buy Times Warner and which was the other one? Times Warner and one of the another media company. It was able to buy just because of that. When .com, the recession on .com happened, right? Then the value of AOL became worthless. So just because of the value, right? It went up. Times Warner and which was the second? Times and Warner Brothers. Yeah, Times Group and Warner Brothers, right? So it was just based on the stock price, right? It was able to buy two of the very, very powerful companies of US in media, Warner Brothers and Times Group, just by the share value, right? So look at all these things. So what we do is we just go with based on the performance. If a .com or a Asian financial crisis or a housing crisis happens, right? Things can be very different. So go with the caution. That's the point which I'm trying to make here. All these are automated tools. Look at the things, right? So that's pretty much about what we wanted to cover. The knowledge is again the same things which we have been seeing in all the other presentations. Tutorial.topstock research, videos, and sessions like this. This is how we are sharing our knowledge with you guys on product as well as some of the concepts. Thank you for staying late so much, that too on a weekend, post lunch, right? See you soon, guys, in the next session. Yeah, till then.